First, we were looking at how American households are already carrying about $17.5 trillion in debt. And sometime last year, an economist at Wells Fargo pointed to the fact that there's about $46 billion worth of phantom debt lurking in the economy with buy now, pay later services. And we just wanted to note that that's a conservative estimate. Basically, our reporting looked at how no one really knows exactly how much buy now, pay later debt is out there because, due to some regulatory loopholes, a lot of these providers are not furnishing data to credit bureaus. So while economists and Wall Street traders are making, projections on the economic outlooks based on, how the consumer is doing, we don't really have the full picture.
So, Paige, how big is this out there? When I was growing up, we called this stuff layaway. Now it's pay now, buy, or whatever it is, buy now, pay later. Is it a big market? Do we think it's a lot out there? Are people doing this stuff?
Yeah, so just to go back to one thing that Paulina said, actually, so to be clear, it's not lenders that kind of exist in credit card lenders, auto lenders, et cetera. They're not required to actually report this data to credit bureaus, but they are, it's kind of like an ecosystem, right? Like you want to know what consumer debt is out there. I want to know what consumer debt is out there. Let's provide as much data as possible to the credit bureaus. But I think that's a good question because we really don't know how much consumer debt is out there, in particular the buy now, pay later debt. And that's kind of why this Wells Fargo analyst, Tim Quinlan, kind of, penned this or named this phantom debt.
How does it work? So does it buy now, pay later, is it 0% interest? Do I have to pay a minimum every month? How does that work, and how is it different or similar to credit cards, for example, Paulina?
So typically, a buy now, pay later option will show up in most online checkouts. It offers, most customers, allows them to split up their purchase into 4 installment payments over the course of 6 weeks. So the first payment is due right at checkout, and then the next 3 are due every 2 weeks after that. And they usually offer this with a pretty quick credit approval, and they offer 0 interest rates. So where consumers start to kind of fall into trouble with buy now, pay later services is one, if you do fall behind on a payment, there are late fees associated with that. And it's not just that. One of the concerns that the Consumer Financial Protection Bureau cited was this issue of loan stacking. So a consumer could take out a buy now, pay later loan on a Tuesday of one week and a Wednesday of, the next week, and those payments will just happen 2 weeks from that time of purchase. And it can be really difficult for consumers to keep track of, when those payments come due, how much they actually owe across, one or sometimes several different buy now, pay later service providers.
I'm looking at your story here, a gentleman, Fabrizio Lopez. He found out the hard way that paying on time won't help them build up their credit score, but on the other hand, the downside is that they fall behind. Not only do they get charged late fees, but they'll also get the loan turned over to debt collectors. So are we seeing more of that, I guess?
I would say it is. It's just, again, it's to go back to the main point. It's challenging to quantify how much of this debt is out there on top of expensive payments that consumers already have to grapple with, like rent and gas and sort of you name it. But yes, essentially, a lot of these companies kind of market themselves as being able to build credit or help consumers to build credit, when in fact the downsides are still there, which is if you miss those payments, those are charged off, and then it's turned over to debt collectors, and you do see a ding on your credit score. But there's little upside in that if you are making your payments on time, like a credit card, you see that reflected in your credit bureau.
Do we know how much they're spending? What the biggest proportion of money is being spent on buy now, pay later, and what they're buying?
So, obviously buy now, pay later services kind of, rose to popularity in the pandemic when people were using it to fund, buying a new wardrobe or new electronics. But increasingly, as inflation has continued to squeeze American consumers, we're starting to see them use them for necessities like groceries. We actually talked to a consumer who used Klarna to split up his grocery payments, and when he lost his job unexpectedly, he couldn't pay those back.
Are there any regulators? Are the regulators looking at this? I don't know who the regulators would be. Anywhere on the banking side.
FDIC?
FDIC,
maybe?
yeah.
Well,
The Consumer Financial Protection Bureau 2 years ago said that they would issue guidance on whether the industry would be regulated as credit, and Paige reported about the OCC also warning banks that this was a potential risk. But so far, we have not seen any clear regulation on this.